We are back. Thank you very much for joining us this morning. Let me take time to introduce the panel that is joining us this morning for the next 1 hour as we try to understand the biggest economic headlines that you're waking up to this morning. But then I'll take their view quickly on the biggest one that you're waking up to today before we also go to the others that you are going to be faced with today. Number one, we're joined by STELLAH SWAKEI, who's an investment analyst. STELLAH, good morning.
Good morning, Simba.
Happy to have you around and welcome officially to Metropole Television. We are also joined by Robert KARUIYI, who is also an investment analyst. Robert, how are you doing, sir?
Yeah, I'm doing fine, Simba. Nice to see you again.
Nice
I hope
to
we'll
see
have
you
a
again.
nice interaction.
It's gonna be good, fantastic. In the studio, we are also joined by RAPHAEL MATU, who's an economist. RAPHAEL, how are you doing, sir?
Yeah, thank you for the invitation.
Fantastic.
Yeah.
RAPHAEL, let me begin with you.
Yeah.
Just quickly on that before we cross over to where we are in terms of the biggest economic headlines. Now, Kenyans are waking up to 134 shillings a litre of petrol, 115 for diesel, 110 for kerosene. The biggest jump ever witnessed in this country. I mean, we're coming from a low of what? 127. Is it necessary, RAPHAEL?
Thank you once again. I think it's quite a big challenge and is not nice. It's unfortunate, and Kenyans are not happy, I know. And
I like that you're saying Kenyans are not happy. We've not seen anybody complain. We
No,
are
no,
the ones who are complaining.
I've been following a bit on when I was out waiting. I've been following on social media.
Yes.
And I could see the reactions and complaints. And also being an economist, I already had some people trying to chat me and maybe asking, what is your view, what is your feeling? Yeah, I think is quite a big jump, and maybe probably as we go on, we'd like to see really what was the reasoning of what really informed that. I meant to understand that maybe there was a removal of the subsidy on oil prices, and that could have led to that increase. We are likely maybe probably to see some serious economic maybe implications, especially in terms of the cost of living. That is inflation, and it may have to call for CBK really to put some tough measures to really arrest inflation or the pressure.
Ooh. All right, let me cross over to Robert. Robert, I mean, we're coming from 6.57% inflation. That's what we're riding on now. I mean, if you're revising it up to 134, the biggest one yet, Robert, are we likely to go beyond the 7%?
So Simba, I think when we look at this as Kenyans also, we have to understand that the government has actually held the prices constant for quite a few months. And so this has been achieved by reducing the margins of these marketing companies. So this was actually a long time coming, because what the government was doing was actually not really sustainable. It was just to maybe delay the ire of Kenyans. So yes, we can imagine that inflation was still rising even while the fuel prices were still constant. But we are still considering that globally fuel prices are on the rise, and also this has to translate locally. So the government has actually tried to maintain the prices at the current levels for quite a few months, and where they are now, it's just a consequence of maybe it had been pushed a bit too far. So it was a long time coming. The constant prices, I could say maybe they were too good to last, even though they weren't as low as we would have liked. So we still expect now to see the inflation figures shoot up. But it will be interesting also to see how the central bank responds to this, because we think it will still be within their range, but we're still waiting to see how they will respond to this also with their MPC rates.
Isn't it? I like the way you're saying it's still going to be within their range. Hopefully, though, Robert, because it's not just that that's going to shoot up now, because we do know in the country, when you revise the cost of a fuel upwards, then manufacturers, transporters, and any other person within that value chain also responds. STELLAH, let me bring you in. Robert is quite optimistic that maybe it might be within the CBK's range. STELLAH, from 127 to 134. In fact, even direct this morning, it is 135 for you. Stella, react, please. Kenyans are watching you this morning.
Okay, so I think the inflation rate has to go up, as Robert has said, but let's see how the CBK react, and also the government, since the IMF also warned against the inflation rates going up, since it said it will halt the debt services that it gives, the funds that it gives to the country. So I'm thinking the inflation rate will remain within the range of 2.5%
Yes.
to 7.5% based on that fact.
Pretty much. Oof. All right, let's cross over to what we have for you then this morning. Now, the Treasury is convinced that the reintroduction of the 20% excise duty on betting at a rate of 20% of the amount staked will help combat the rise of betting among the youth in the country. This comes at a time when Treasury has embarked on a second push to increase the minimum tax from the current 7.5% in the next financial year, with analysts predicting a standoff should the Treasury take this route. And in June, Parliament shot down Treasury's proposal of a 20% excise tax proposal and consequently lowered it to 7.5%, saying that it was too punitive to do business in the environment for potential investors. Now, betting stakes tax was introduced in 2019, but later removed in July last year through amendments to the Finance Act 2020 following lobbying by betting farms. Okay, let's look at that trend. VAT and excise duty. Where has it been? All the way from 2015 up to where we are right now, you will see that indeed VAT, but we're really talking about excise duty, has been on the rise as well, generally across the board. That's where the question comes from, Raphael. The question of controlling the rise of betting in the country. Is that the best way to control it?
I think, yes, maybe, first of all, it's true, the government is trying to do two things at the same time. So they are trying to take advantage of betting to raise revenue. At the same time, they want to use tax to discourage people from betting. I think, as you noted, especially from 2015, as you have just said, that the people who are engaging in betting, especially the youth, and I think even went to the old people and even went to women. You know, initially we never thought women would be involved in betting. So it really grew in terms of numbers, and I think we could also see some even weird cases where maybe somebody bets school fees, somebody commits suicide or such things really. So I think it was really a serious issue. So here we are trying to do two things. We are trying to reduce betting, and we are also trying to maybe take advantage on the same to raise revenue. On the fact that, of course, is quite difficult to really weed it out completely. Yes. So it's just like, I think what we call as the sin tax, just like in the case of beer and cigarettes. As much as you try to discourage, you are taxing for social values. At the same time, you are able to capitalize on the same for revenue purposes.
Pretty much. I'll be coming back to you on that. And when we look at exactly where we are, Raphael, in terms of government revenue, and I want to go back again and look at it as well. If you could look at that data that we're showing you this morning, I mean, from 2015 to 2016, all the way to 2019, 2020, you will say that indeed the government, the KRA has been racking up those numbers. And if we move to the next data set now, and we're going to start it from 2019, 2020 to 2020, 2021, you will see that for the very first time in 8 years, we crossed that mark. That we hit our target and actually surpassed it. You like to think that indeed when we're crying of revenue in this country, when we're crying of different ways for the government to raise money and not go into extra borrowing, that encouraging these industries but then giving them a light way to operate could be good because they need that money.
Yeah, I think as I've said, yes, it's true. And first of all, we need to understand where we are in terms of revenues and in terms of expenditures and in terms of debt. Yes. So it is do I call it catch-22 or something? Is like we have huge deficits these are serious targets we have set for KRA to really try to raise revenues that are trying to catch up with expenditures when the expenditures are still very high. Not forgetting, of course, the issues that have come in terms of debt repayment. So we have serious issues now. Most of the debts are due, and of course, quite high cost of borrowing because of also moving to commercial loans and many other factors.
Yes.
So I think, yes. So as I said earlier, it's like, yes, we want to get rid of it. It is not really good for the society. At the same time, we still want these people to have some space, maybe probably for them to do business in a way that we can be able to benefit from them. However, I think, again, we cannot really write off maybe some political factors, or maybe maybe influence of external money factors, if I may put into in the whole negotiations, in the whole discussions, in the whole things of doing business, because eventually the law comes back to Parliament. They're the ones to pass the law. They're the ones to say, oh, this 20% is too high, we will need to lower this. So there could be also some other factors, business factors beyond the normal argument. Of course, yeah, because in business, at times is lobbying, the issue of lobbying may have to come in.
All right, Stella, want your view on that as well. You hear what RAPHAEL is saying. You got to look at it from a wholesome point of view. Might not be control, might be the government wants more revenue from that, might be political influence around that area. Talk to me, Stella. What do you stand when it comes to this?
Okay, so we can all agree that gambling is a social problem. So we should definitely...
Can the government, Stella, can the government be tasked with solving a social problem? Should we leave it to other people within the economy?
Yeah, the government can be tasked with solving a social problem, but for my opinion, this is not the right approach. We can use other approaches, like coming up with agencies that will direct people or educate people on how to bet, the risks of betting, how far it should go, such. So I think a balance between finding a solution to the problem and ensuring that the industry, the players in the betting industry continue thriving will be the best approach.
Pretty much. Robert, need your view on that as well. Is it control? Is it the government trying to get more money? Because it looks as if we're really pushing them out of the economy.
Yeah, thanks, Simba. I think actually Stella has laid it out quite well. So I think basically with this, what the government is trying to do, they are mostly trying to regulate the companies themselves, because you're seeing betting companies popping out at an increasingly fast rate. So they're just trying to do this to make, first of all, the betting market in Kenya less attractive. So that's what they're going for. And with the increase in this tax, of course, they realize that this is an industry that generates a lot of revenue. So they also want a piece of that cake. And so it's kind of unfortunate, because when you look at it, it's a bit like they want to have their cake and still eat it. So we don't know how this balance will come in. The last time they tried this, we saw a giant like SportPesa, which decided that it was no longer sustainable, although they did stage a comeback. So it's mostly on the side of the betting companies, where they are trying to control them, as opposed to now controlling the people on the ground, the Kenyans themselves, maybe providing education on maybe the demerits of gambling, or maybe the effects of gambling. And it's quite of a gray area, and it's a quite difficult balance, actually, to be honest.
Pretty much. I beg that we move on to the next issue that we have for you this morning, where data by Treasury indicates that domestic borrowing shot up 50% to 1.3 trillion. Wow, a factor that locked out the private sector. They saw banks and other investors handed a 450 billion investment avenue, which was largely behind the huge profits that commercial banks recorded in their half-year results as provisions for bad loans reduced. Now, the report, however, indicated that the credit to the private sector expanded by just 8.4% to stand at 2.89 trillion at the end of December 2020, a clear indication of the competition that the private sector faced for credit in 2020. Now, the promise for the government to bring down domestic borrowing is seemingly looking like a challenge as Kenya's budget deficit has continued to rise over the years, with the deficit jumping from 573 billion in 2016 to 893 billion last year. Now, domestic credit, however, grew by 18.6% from 3.66 trillion in December 2019 to 4.3 trillion in December 2020, according to the survey. That's where we are. Let's look at that data this morning. First, we begin on growth of credit to the private sector. That's the data that we're giving you this morning, and now was also confirmed by that report, standing at 2.8 trillion. Let's go over to the next one as well in terms of composition of government debt, and we're looking at it by holder, all right, as of 31st December 2021, and you will see the biggest one is banks at 53%, pension funds coming in at 30%. Move on to the next one as well, which is going to show us that composition as well. And you will see that indeed, when it comes to composition of government gross domestic debt by instrument in 2020, Treasury bonds at, wait for it, 71%. And the banks ran there. Treasury bills were just at 28%. So let's look at exactly how the banks performed, therefore, in the first 6 months of the year. And everything is pointing northwards from assets. There's no need of looking at those figures. Good figures confirmed by the CBK as well. If you move on to the next data set that we have for you this morning, in terms of the selected performance indicators for the first 6 months of the year, you will see anything from gross deposits, gross loans, profit before tax, pointing northwards. But then again, if you look at those non-performing loans as well, they're coming down as from Q1 of 2021 to stand at just 14% in Q2 of 2021. Raphael,
yes.
71% when it comes to local borrowing. We're talking about treasury bonds.
Yeah.
Is it a lie that the government is concerned about the growth of the private sector? Because the numbers tell a different story.
I think, as you said earlier in the first discussion,
yes,
the government is trying to balance between the external debts and the domestic debts.
Yes.
We need to understand that both of these categories of debts, they have their own advantages and they have their own disadvantages. We have problems of borrowing externally, we have challenges of borrowing internally. So the problem, of course, has been to try and reduce the domestic borrowing,
yes,
all in an effort maybe probably to give more leeway to the private sector, to avoid the crowding of the private sector. But I think even in the process, again, the government, as we said earlier, with the revenue expectations, with expenditures and the deficits, we still find ourselves maybe probably borrowing more. Yes. And also given the fact that as we have been looking at some of the debt indicators and maybe some of the comments from international organizations, the World Bank, IMF. So again, we tend also to try to move slowly even in the external sector. So I think it becomes again quite, I think, difficult for the government really. It's like both of the debts, both internal and external, are almost growing at the same pace. And in fact, they're almost half at where we are now.
Yes.
Yeah. So I think trying to create that delicate balance becomes a big problem. And definitely, of course, as we go on, we understand there, of course, are the challenges that may still be facing the private sector and
yes,
making it difficult for them to borrow. But I think even from empirical evidence, it's true that in most cases, more government borrowing internally has serious repercussions on the private sector borrowing.
I'll be coming back to you because it's a separate issue that we have here this morning.
Yeah.
I'll be asking you what was special about 2020, but even from the Central Bank of Kenya, was even their monetary policies,
yeah,
all of them are geared towards improving lending to the private sector, but it's seemingly not working. Let me cross over to Robert this morning. Robert, yes, stellar performance from the banks in the first 6 months of 2021, which makes us look at how was it in 2020. And you will see there was an avenue, a 450 billion shillings avenue for the local banks to lend to the government. And in fact, that debt composition banks 53% of the local debt in the country. Robert, what was special about 2020? I mean, the government had ways, that's when we borrowed a lot, but it looks as if they came back locally to borrow.
Yeah, so Simba, when you look at 2020, we can start, for example, with government debt. So it was an extraordinary year.
Yes.
And of course, the government needed funding for all these programs to support Kenyans, support those who had been affected, people who had lost their job, also the various initiatives for the youth. So they needed money.
Yes.
And the funds that they got from the international markets were certainly not enough. So they needed to complement this with the local borrowing. So this is what happened, that we ended up increasing our borrowing domestically in 2020. So that's the first step. Then when you look at the other side now for the banks, the asset quality really took a hit in 2020 because many households and many companies and industries were unable to service their loans, of course. So that's why we also had this restructuring window. So it became less attractive for the government, for the banks, to lend as opposed to lending to the government, because the government has this fixed income aspect of it, and also the debt to the government is considered to be risk-free. So they ended up lending more to the government as compared to the public. So this is how it went down, and the growth in government securities actually ended up outpacing growth in loans, and this trend is still continuing even in 2020. Although now loans are slowly recovering.
Yes.
And so, yes, we also have to note that since 2016, when the interest rate cap was introduced, growth in private sector borrowing has never really recovered as much. Because remember, the loan pricing formula has still not been approved by the central bank. So banks are still, they're in between, weighing their options. And that's why they're seeing lending to the government based on also the risk-adjusted return is the best option for them currently.
Pretty much. Stella, your sentiment on this as well. The government keeps on saying, well, we need to improve lending to the private sector, that the economy is anchored in the growth of the private sector. But even when you look at growth of credit to the private sector, Stella, we're just talking about 8.4%. In fact, we are not even in the double-digit territory for quite a long time. Is it the failure of the Central Bank of Kenya, or it's a catch-22? It was a catch-22 in 2020, like RAPHAEL is saying, that indeed we needed that money as the government because the taxes were not there.
Okay, so the government has to support the private sector.
Yes.
That we agree. So I'm thinking that the government should look for other ways to get money. In 2020, we didn't have taxes that much. There were taxes, but the amount could not cater for whatever the government needed to budget for.
Yes.
So the government can take other initiatives like privatization, public-private partnerships to give room. Even the lending from the banks, it's okay, but they have to balance this to make sure that the private sector is growing. So we need growth in the private sector because this will support so many people. It will support SME, the economy in a very
Yes, we seem to, yes, thank you very much, Stella, for that. Let me cross over this to RAPHAEL. Yeah. When you look at even where we are in terms of the interbank lending, then you will see that it's actually profitable. Right now, should a bank decide to lend to the mass market as opposed to lending to the government, I mean, the return that you get from those treasury bonds is not the same as compared to what you're getting from the mass market. That's a known area as well.
Yeah.
But then you have a situation where banks are saying, let's just lend it to the bank, because then the risk factor is heavily reduced when you're giving it to the government as opposed to putting it in the mass market. A lot of proposals have been given out, RAPHAEL. In fact, there was one that they said, well, we have to make sure that a certain percentage of the loan book or the loan portfolio for the banks operating in Kenya has to go to the mass market. But then somebody comes and says, no, banks are business entities. You can't let banks help out your economy. Let's clear that out, Raphael. Should we task local banks with the responsibility of helping the private sector?
So I think probably before I respond to that, I'll just like to add something that Stella have just said.
Yes.
And more so probably looking for alternative ways by the government to really finance the deficits.
Yes.
And probably to take less from the local market or internal borrowing. And she has talked about privatization, and
yes.
She has also talked about PPPs. Those are the public-private sector, whatever. Working together, and the issue, of course, is maybe the time span that we had. And for example, if you go for privatization, it's really quite a long process where maybe you have government entities which we allow now the public to come and buy shares, or maybe selling of such entities. And again, PPPs will also be involved for long-term kind of projects. So therefore, in a scenario where we have quick need for revenue, probably like what we had last year, then they may not be quick solutions. Rather, those ones are likely to be relatively long-term solutions, which I think we should be looking at in the long term, but not in terms of crisis. In terms of crisis, they may not be able to solve the crisis problem.
Yes.
Then moving on to where you're talking about giving responsibilities to the bank, really to help in running the economy. Again, a thin line, because as you have said, is a private sector. We know why we are in business as banks. Then the question is how far, how deep should the regulatory framework come in?
Yes.
Yeah, because just like we talk in a free market economy, yes, we have our freedoms, we are there being guided by profits, we have the freedom to do what we want to do, but then we ask ourselves, where does the government come in? It comes in, maybe probably one of the reasons is to give us a framework for rules and regulations on even how to operate and how to do business.
Yes.
It comes in maybe probably for maybe due to issues like externalities, those differences. In fact, we may even have some scenarios where, in fact, what you're talking about is adverse selection, where maybe the bank will now leave one group at the extent of maybe favoring the government and so forth. So how to draw the line, because at times if the government stretches too much, then we say there is maybe overregulation, which maybe probably is limiting the operations of these institutions. So the question would be, legally, how far should we go?
And that brings me then to the next question. I want to respond to that in a minute, because that's the same question that I want to put to Robert and Stella this morning.
Yeah.
That the only way is through monetary policy.
Yeah.
But Raphael, we do know. I mean, we sit here and praise the CBK for returning at 7%, for the 9th consecutive time.
Yeah.
Should we then say, Raphael, that this CBR that is at 7%, it needs to come way lower, so that the banks can say, well, if we lend to the government, it's close to nothing, there's no incentive there, so we have to go further and then extend our touch into the mass market. Is that what it is?
In matters on monetary policy and even fiscal policy,
yes.
So there are things we call as rule versus discretion, right?
Yes.
And somehow is like what really determines the effectiveness of some of these policies. So at times when they become predictable, then the expected impact may not really happen. Because like the players already maybe probably have a way of, can we be able to predict how the CBK will react? So if at all we can be able to make predictions, then we will have to take safeguards on how to protect ourselves, maybe probably as economic players. So to a great extent, such kind of predictability, at times it affects the effectiveness of some of these policies.
Pretty much.
It's like you already know what will happen. So how do you safeguard yourself? So at times, some of these issues of predictability of policy, at times maybe, again, we have rules which it has to follow strictly. They make it easy to predict, and therefore makes it easy for players to behave in a particular way, rendering the policies at times ineffective.
Well, but you hear what Raphael is saying, that, well, I mean, predictability of some of those tools that the Central Bank of Kenya might want to bring into the regulatory space, therefore, to force these banks, therefore, to go into the mass market in some way or another, then the players within that specific industry might know how to adjust. Case in point, Robert, we've seen the CBK and the government of Kenya. And by the way, Robert, I don't know whether you remember a product that was started called the Starway product, launched by President Uhuru Kenyatta and CBK Governor Dr. Patrick Njoroge. I don't know where he went. We've never seen any data that indicates that indeed this is now penetrating into the private sector and the mass market. Case in point then, Robert, should we question the efficacy of this so celebrated 7% CBR, and what can the government do, and also the regulatory body there, CBK, to make sure that indeed lending to the private sector is happening?
We're actually having points there. So first of all, one thing we have to acknowledge is that banks have a social contract to their depositors to lend money to them. That's something but it's surprising that we still have banks with loan-to-deposit ratios ranging in the mid-40%. So this shows how much that they are security the other banks spending. Now, when you talk of the regulatory body, that is the central bank and the monetary policy rate. So first of all, we have to recognize that inflation is rising.
Yes.
So it will be really difficult for the central bank now to again lower the rate, because we are having this discussion of, for example, fuel prices are rising. So if the inflation starts, if it starts maybe flattening with the range that we've set, then again they won't have that option of reducing, because central bank rate is to maintain price stability. They've stalled for quite a while now, and that's what is actually, I think that's what actually stalling lending banks. Now, if only they could come to an agreement with the banks and come up with a pricing formula, yes, that is more maybe reasonable for both. Now see also lending grow, because at the moment lending is not attractive for the banks. That's why they are seeking other avenues. And I think so that's the main issue, because for the central bank rate itself, we don't have much room to go lower. But the best thing we can do right now is to agree on a loan pricing formula that is at least responsible, first of all, and of course reasonable for all parties involved, so that we also make sure that the borrowers themselves are not, of course, taken advantage of. So that's the best that the central bank can do at the current environment.
Yes, pretty much. So now, Stella, we have a minute left just before we go for that break as well. And I would like to ask you as well, we've seen products that have been bought by the Central Bank of Kenya and the government just to try and push the banks into the mass market. And in this case, when we're talking about the mass market, it has to be the private sector. Is that the way to go? Come up with attractive products, sort of get them covered by the government, and then after that say, well, any bank that goes into this, we can maybe have a certain ratio of non-performing loans covered by the government, because we want to also promote lending to the private sector. Is that where it must begin now?
Okay, so Simba, the banking sector itself is also looking for profits in the market. And it's also looking for safer havens for its money. So the banks normally use the deposits from customers to get funding and other borrowing. So basically, the bank should be responsible. The banking sector can chip in supporting the private sector.
Yes.
So asking if this is the way to go, at this point, I'd say yes, because the banking sector itself is not initiating or coming up with products or coming up with the ways to support the private sector on its own. So the government has to chip in providing the attractive products to give to private sector or to accelerate the growth in the private sector. Well, yes, we can go with that.
I like the way she answered, yes, we can go with that. All right,
yeah.
Let's go on a break like this. Raphael, I want us to look at the key performance indicators for microfinance banks in the country. Even if you can, just one data set, because there are a lot of talking points that we can pick from there as we come from this break. If you can, do have that data? Yes, indeed, we are there. And I want to look at where we are in profit before tax. 2017, generally, on the negative, 2018 on the negative, 2019 on the negative, 2020 on the negative. Would we expect 2020, 2021 is going to be on the negative? But just one word, the non-performing ratio for loans in that specific industry, negative 32% averagely as we ended 2020. Just one word, negative 32% non-performing, are they on the ground? Yes or no?
Maybe, yeah, I think so.
Maybe, yeah, right. Robert, negative 32% non-performing loan book. Is that an industry on the ground?
Timber, when you look at the banking sector also.
Robert, one word, we're going for a break. Your sentiments after the break.
Okay, for 2020, yes.
Yes, for 2020, yes. Stella, negative 32% non-performing loan book. Whew. Are we on the ground?
Yes, but we are recovering.
Yes, we are recovering. I like the way you're saying I'll be looking at that recovering point, because all the way from 2017 to 2020, negative in terms of the average profits. Why? Is this an industry on the ground? Once we come back here on a business, my name is Simba Elijah Charles KIAGE. Join us online at Metropole TV KE across all your social media platforms.